Imagine walking into a bank, smiling, confident, and then walking out confused because your loan got rejected. You had no idea that one small thing on your credit report, something called a hard inquiry, could have played a big role. Today, we are going to pull back the curtain on what a hard credit inquiry really is, how it works, when it matters, and when it does not. By the end, you will know exactly how to protect your credit score and avoid nasty surprises the next time you apply for credit. But there's a twist, because the same thing that can slightly lower your score today could also be the key to unlocking a better financial future tomorrow. So stay with me until the end, because once you understand this, you can actually turn a hard inquiry into a strategic tool for your money life. Number 1. What exactly is a hard credit inquiry? A hard credit inquiry happens when a lender or creditor checks your credit report as part of deciding whether to give you money or credit. It is like them peeking into your financial diary to see if you are trustworthy with debt. This check comes from one of the three main credit bureaus, Experian, Equifax, or TransUnion, and it is recorded in your credit history. Example: if you apply for a car loan, mortgage, credit card, or even some personal loans, the lender will perform a hard inquiry before approving you. It is not something random. You must give permission before it happens. Number 2. Hard inquiry versus soft inquiry. What's the difference? Think of a hard inquiry as a full background check. A soft inquiry, on the other hand, is more like a quick glance. Soft inquiries happen when you check your own credit, when a credit card company pre-approves you, or when an employer runs a basic check. Example: if you get a "you are pre-approved" letter in the mail, that came from a soft inquiry. It does not affect your credit score, but when you officially apply for that card, that's when the hard inquiry happens. Number 3. How much? Does a hard inquiry affect your credit score? Most of the time, a single hard inquiry drops your credit score by only about 5 points or less. It is not a massive drop, but here is the thing: multiple hard inquiries in a short period can add up. Example: if you apply for 6 credit cards in 2 months, lenders might see that as risky behavior and your score could drop more significantly. Number 4. How long does a hard inquiry stay on your credit report? Hard inquiries stay visible for about 2 years, but the good news is that they usually only impact your score for the first 12 months. Example: if you applied for a car loan last year, that hard inquiry will still show up today, but it is not hurting your score anymore. Number 5. Why lenders care about hard inquiries. Every hard inquiry tells a story. Lenders know that if you are applying for a lot of credit in a short period, you might be in financial trouble or taking on more debt than you can handle. Example: if you apply for 3 different personal loans in the same month, a lender might wonder, why do they need so much money so quickly? That is why they use hard inquiries as one of many clues in deciding your approval. Number 6. When hard inquiries are grouped together and treated as one. Here's where it gets interesting. If you are shopping around for a mortgage, auto loan, or student loan, credit scoring models usually treat multiple hard inquiries within a short window, often 14 to 45 days, as just one inquiry. Example: if you visit 4 car dealerships in 2 weeks, your score should only count it as one inquiry. This is to encourage rate shopping so you can find the best deal without fear of hurting your score too much. Number 7. When you should avoid a hard inquiry at all costs. If you know you will be applying for a big loan soon, like a mortgage, avoid smaller applications that trigger hard inquiries right before. Example: applying for a store credit card a month before your mortgage application could slightly lower your score and cost you a better interest rate. Timing is everything. Number 8. How to check your report for hard inquiries. You have the right to see every inquiry on your credit report. Go to annualcreditreport.com, the official free site, and pull your report from all 3 bureaus. Example: if you see a hard inquiry you do not recognize, it could be a sign of identity theft. You can dispute it and have it removed. Number 9. Can you remove a hard inquiry? If it is legitimate, meaning you actually applied for credit, you cannot remove it. It will naturally fall off after 2 years. But if it is a mistake or fraud, you can file a dispute with the credit bureau and request a removal. Example: someone applies for a loan in your name without your consent. That is a fraudulent hard inquiry, and you can get it deleted. Number 10. How to minimize damage from hard inquiries. Space out your credit applications. Only apply when you truly need the credit. Example: If you want a new credit card for rewards, wait at least 6 months after your last big application. Also, focus on building the other factors in your credit score, like payment history and credit utilization, because those carry far more weight than inquiries. Number 11. The secret upside of a hard inquiry. Here is the twist I mentioned earlier. A hard inquiry means you are actively applying for new credit, which can lead to building a thicker, healthier credit file if used wisely. Example: applying for a credit card with no annual fee, using it responsibly, and paying in full each month can improve your score in the long run. Even though the hard inquiry gave you a small temporary dip, sometimes a little step back today positions you for a big leap forward tomorrow. Number 12. Real-life story of a hard inquiry gone wrong. A young couple applied for a mortgage. 2 weeks earlier, they had signed up for 2 store credit cards to get discounts on furniture. Those 2 inquiries dropped their score just enough to bump them into a higher interest rate tier. That small change cost them thousands of dollars over the life of the loan. This is why understanding hard inquiries is not just theory. It is real money at stake. Number 13. Real-life story of a hard inquiry used smartly. John wanted to buy a used car. He knew his score was strong, so he applied at 3 lenders within 1 week to shop for the best rate. Because all the inquiries were within the allowed time frame, they counted as one. He ended up saving over $1,200 in interest over the loan's life, all because he understood the rules. Number 14. Your action plan from today. First, check your credit report and see every hard inquiry listed. Second, decide if any were mistakes or fraud and dispute them if necessary. Third, before applying for new credit, ask yourself, will this help me or hurt me in the long term? If it will help and you are ready, go for it strategically. Number 15. Hard inquiries and credit card limit increases. Many people do not realize that requesting a credit limit increase can trigger a hard inquiry. If the lender needs to check your credit before approving the increase, it may lower your score slightly. Example: asking for a higher limit on your existing card right before applying for a home loan could work against you. Number 16. Hard inquiries for apartment rentals. Some landlords run a hard credit inquiry before approving your rental application. This can affect your score just like a loan application would. Example: applying to multiple apartments in 1 week could mean several hard inquiries showing up at once. Number 17. Insurance companies and hard inquiries. While many insurance companies use soft inquiries, some use hard inquiries for certain policies. Example: a smaller insurance provider might run a hard inquiry before issuing a large life insurance policy. It is always worth asking them before you apply. Number 18. Utility companies and hard inquiries. Starting service with a utility provider, like electricity or internet, can sometimes require a hard credit check. Example: moving to a new city and setting up multiple services at once could mean several hard inquiries if you are not careful. Number 19. Business loans and hard inquiries. Applying for a small business loan or business credit card often results in a hard inquiry on your personal credit. Example: even though you are borrowing for your business, the lender might still check your personal report, impacting your score. Number 20. Student loans and hard inquiries. Private student loans almost always involve a hard inquiry. Example: applying to multiple lenders to compare rates is smart, but be sure to do it within the allowed window so it counts as one. Number 21. Credit builder loans and hard inquiries. Even products designed to help you build credit, like credit builder loans, may require a hard credit check. Example: opening one to improve your score could cause a small dip first before the long-term benefits kick in. Number 22. The too many inquiries, red flag. Credit scoring models can flag your profile if you have too many inquiries, even if they are spread out. Example: more than 6 hard inquiries in a year can make you look risky to certain lenders. Number 23. Hard inquiries and co-signing. If you co-sign for someone else's loan, the lender will run a hard inquiry on your credit as well. Example: co-signing a car loan for a family member means you take the same credit impact they do. Number 24. The myth of checking hurts your score. Many people think simply looking at your credit score will hurt it, but checking it yourself is a soft inquiry. The only time you take a hit is when a lender pulls it for a decision. Example: using a free credit monitoring app will not cost UNE points. A hard credit inquiry is not something to fear. It is something to understand and manage. Used carelessly, it can make your financial life harder. Used wisely, it can help you build credit, get better deals, and even save thousands over time. Now I want to know, have you ever had a surprise drop in your credit score from a hard inquiry you forgot about?